This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. The Wealth Roundup for the week of January 14th, 2026. I'm Terry Evans, along with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Well, we got a firm grip on 2026 now, Patrick. And it's funny, I was going to talk to you and ask you about the markets right off the hop here, but I read something and I thought it might be interesting to bounce it off you and see if you had any thoughts on this as we get into sort of an update on the markets. According to Bloomberg, an optimistic consensus has taken hold among professional investors that the rally of 2025 will continue into 2026. What are your thoughts on that?
Yeah, when we were formulating our forecast for 2026, and we did that just before year end, we were in line with that thinking. Sometimes when you hear forecasts, people wonder, where are you cooking that up from? But analysts, experts, economists, they've been doing this for a very long time, and they look at some common data points to determine that outlook, and then what's the probability of that outlook coming to fruition? And yes, an accommodating central bank, or in our case, central banks, because we're really looking at the U.S. and Canada, and so we look to that and saying, we don't think rates are going to get more restrictive. So there's one. We look at earnings momentum on stocks, as we kind of came out of the third quarter. We're going to talk a little bit about earnings today, and generally positive, moving in the right direction. A lot of fiscal spending from governments, so there we have, another kind of tailwind as governments come out. Here in Canada, we've got major projects. We got these big major projects that the government's going to be spending money on. I was looking a little bit at this defense spending, these submarines that we're apparently going to buy and not see any of them until 2035 or 2036, and fighter jet procurement, and all the infrastructure that needs to go in behind that, and then lots of these big deals that we're doing on defense. They come with some made in Canada solutions. So, maybe some workers in Quebec or Ontario, or, on one of the two coasts, perhaps getting involved in some of that shipbuilding. And so, yeah, you kind of have lots of these economic facts, and we want to see forecasts based on factual information. And then we want to compare it to forecasts that we've made in the past. And so these things get plugged into the model. They're never going to pick up an unexpected geopolitical event that we might be faced with. Often those things, while they do impact the market, they don't usually derail the market from its long-term projection, or its direction. So yes, I would agree with that consensus, and that's our house consensus. And, I think we are careful not to set expectations too high, but I think the environment looks generally positive for equity investors and fixed income investors, albeit we are in an environment where interest rates are lower than they have been for the last 2 years. So on deposits like bonds and GICs and T-bills and savings accounts, we're expecting those investments to return to be a little bit less.
Each time before we have a chat, I always kind of look at the markets to see what we're dealing with on the current day, present day. And I look at week, 3 months, year to date. And I don't know. I went year to date. Oh yeah, it's only been 2 weeks.
Yeah.
There's not really something to measure right now as far as year to date is concerned. But what are your thoughts on the markets? What's the update?
Yeah. Just to that point, though, to back up on something, Terry, what you're doing by going and looking at the data over a range, I think that's really important. I think the mistake that can often be made, and people, this is human nature. What are the markets doing today? Well, today, if you kind of based your mindset, went out and made an investment decision just based on what the markets are doing today, I don't think you're making an informed decision. I think you really do have to kind of look at what the change in the data has been over a period of time. I always think, especially, we say this, with the equity markets, is that they're incredibly forward looking. with what the general trend is for, say, Canadian stocks or US stocks or emerging market stocks and international equity stocks, they're largely based on, I think, what the market believes the economic conditions are going to be a year from now, as that's what we're seeing in the market. So really important to look at that change in data. And so, since our last podcast is that the US market has been, relatively flat. It's slightly down today. Canadian market since last podcast has been stronger, up about 2% since our last podcast. That might have something to do with oil prices. So when you look at, oil prices have firmed up. So coming off of the Venezuelan event, oil prices kind of had sunk on that information. I think there was just this natural belief that all of a sudden, instantaneously, all of this new production was going to be coming off of Venezuela. And so a supply glut, reality sets in. Oil prices, have kind of moved up, but, in that $61 range. So certainly higher, about $6 higher than where they were trading mid-December. Now, on Western Canadian Select, and I think this is going to be the story, and I kind of indicated oil was going to be one of my wild cards for predictions for 2026. We do think that differential between Western Canadian Select and West Texas Intermediate is going to stay closer to where it was in 2024, about a $14 difference. As compared to last year, where it averaged only 11% of a difference. So we were getting a better price for our oil production. Gold, oh my goodness, up already another 7% year to date, 46.35 today. It just keeps on marching forward. And one of the comments is that it's been primarily central bank driven. Now retail investors are getting into gold. So I still like gold. I'm cautiously optimistic on gold, but boy, oh boy, it's sure starting to look expensive. And then Bitcoin clawing its way back. Bitcoin's had a really rough ride over the last 2 months, in around 93,500 US dollars today. So actually it's up 2% today, up about 5% for the year. So yeah, some good things there in the market, certainly.
Anything we have on the economic calendar as far as big announcements coming?
Yeah, so today we got U.S. inflation readings. So we get headline at 2.7, core at 2.6. So very much in line with what our expectations were. Happy to see a 2 in front of that inflation number for the U.S. That means that our kind of house call for U.S. interest rate cuts stays in place. So we were forecasting 3 cuts for the U.S. Fed over the course of the year. Just as a side note, is that kind of our house view is we're not forecasting any rate cuts for the Bank of Canada, although Patrick thinks potentially 1 cut at some point this year. We get the start of fourth quarter earnings. So we had JP Morgan out this morning, slightly beating expectations. Delta Airlines out, also with some pretty solid airlines, although providing some mixed forward-looking guidance, which I always kind of want our listeners kind of paying attention to that forward-looking guidance. I think it's more important than perhaps past performance, where these businesses see the direction of their earnings. The other really interesting one is the U.S. Supreme Court tomorrow. We'll talk about its ruling on the legality of Trump's tariffs. Although our expectation is that regardless of the outcome, is that the U.S. is still going to find a way to keep the bulk of those tariffs in place. And then in Canada, we get a housing report on Friday. So housing starts. And of course, housing has been very much in the eye of the storm here in Canada in terms of affordability. And then on Monday, we get the Bank of Canada's business survey. What's the outlook for Canadian businesses for 2026? So some interesting things on the calendar for sure.
How about some recommendations for financial literacy?
Yeah, so this is really, I think this is a great topic that we can probably spend a couple podcasts talking about. I think one of the reasons why we're doing this podcast is to inform investors, give them some genuine investment advice, and help to steer them away from some of those digital landmines that exist. I'm obviously in the business of providing wealth planning. That's the service that I offer. And so some people might, kind of question, Patrick, why would you want to go and give people other sources to get informed about, investing? And I think most of my colleagues would agree that we get a better outcome when we're partners with our clients, when they're coming to the table with some investment knowledge. And as they get more investment knowledge, then we can work on more effectively helping them manage tough times in the market, can help them effectively use their timeline to compound their wealth and build their financial legacy more effective, because then we're not so much talking about the transaction. We can talk more about proven wealth planning strategies. For example, if somebody already knows what a TFSA is, as compared to not knowing what a TFSA is that we can talk more effectively on how to use that TFSA as compared to what that TFSA is. And so, that's a really kind of simple example, but you can kind of expand on that topic when you think about things like, how various investments are taxed, and what various terms, investment terminology is. So I think there are some really great resources out there, but I also think that they need to be combined with fact checking. So you need to kind of have both. You need to have some enhanced financial literacy, and then you need to be able to kind of fact check that information. So a great resource that I think people would find useful is that McGill University has their financial planning essential modules. And so this is a collaboration with the Globe and Mail and RBC. Each of the modules is taught by an actual McGill professor, and it's something free to sign up with online. I'd really encourage, people who want to improve their financial literacy to check it out. And if any of our listeners do check it out, I'd be interested in some of them giving me some feedback on what their favorite module was. I think that's a great source. The Bank of Canada and the various regulatory bodies in Canada, the investment dealers, they also have some trusted and some very valuable resources. But I find this McGill Financial Literacy Essentials very user friendly. And then secondly, I think that this is one of the best ways to use AI is on the fact checking side. And so even just this past weekend, I did a kind of a 30-minute tutorial with my mom and dad. Now I noticed that my mom kind of walked away early in the conversation, but my dad stuck around. And so, we got the Gemini. So this is Google's artificial intelligence tool. So we got the Gemini tool installed on his smartphone, and then we just did a couple sample questions. And I think this is what you really need to be able to do with the fact checking is that the tool is really good if you ask it a good question. So you need to be able to kind of formulate your questions to get a nice, robust answer. But I gave him the example of something where I felt I had almost found my situation where there was some stealth selling to me over the holidays. A piece of information had found its way into, one of my social media feeds. When I read it, I was like, well, that can't be true. So, used AI to kind of look at that data. It had to do with credit spreads. And so that would be the difference in yield between government bonds and corporate bonds. Looked at it over various time frames, 1 and 3 and 5 years. And my AI search confirmed what I felt to be true, is the credit spreads had been relatively stable. And then on Monday, when I got, this past Monday, first day kind of back after holidays, I checked in with Stefan Morris, one of our credit experts at BMO Capital Markets retail fixed income desk. And he too was able to confirm that data. So when I look back at that feed, I realized it was actually the source was being pitched by a fairly well-known investment firm out there, and probably trying to get investors to kind of crawl up this wall of worry so that they could be sold a product. And so to try to prevent investors from kind of veering into the wrong investment lane, in most cases, it's either trying to find a solution for maybe a risk or a fear that doesn't exist, but maybe being sold something that they don't need. So I think financial literacy is not a bad idea, whether or not you're working with a professional investment advisor like myself, or whether or not you manage your investments on your own. And I think using some of these sources that are reputable, trusted, really good information where the usability is high is a great idea when it's combined with fact checking, which we always say fact checking from multiple sources is the best way to use AI.
That's right. And we were recording this, and it's Connor McDavid's 29th birthday today. And
I heard that.
I
Yeah.
can kind of equate it to that. So even if you are very well educated and maybe even running your own portfolio, it never hurts to have somebody who is a coach, because even Connor McDavid, the best hockey player in the world, still has a coach. There's a system, There's a way to go about doing things, and that's why having a wealth management professional like yourself is super important. For wealth management and to start your investment journey, you can get Patrick's contact information at patrickmleonard.com. That's also the source for this podcast, and that is the Wealth Roundup for January 14th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.